Hey, I'm Tom. I'm a used car dealer, and let me tell you, there are so many tax benefits available when you own a used car lot. The whole name of the game on taxes is to lower that taxable income down to the lowest amount you can. People want to say, oh, I make $1 million, but when it's time to file those taxes, do you want to pay tax on $1 million? Or do you want to find a way to make as little money as possible on paper and still enjoy the benefits of a great life? I'm going to show you some of the things you might have forgot about, or some of the things you may not be aware about when you get into the car business. Let's get going. For tuning in. I guess my hook got you interested. So, my name's Tom. I'm the sleazy used car dealer, and I'm going to show you some of the tax benefits of owning your own business. Now, I'm not going to share anything with you that other people haven't said and written about and this and that. This is just something, if you're thinking about starting your dealership, these are some of the tax benefits that I enjoy the most. And they may not be as important to you, but the name of the game in most cases, again, in most cases, is to lower your tax liability. So the first thing I want to ask when you think about this video and the things that I'm talking about is, what is your tax need? Now, for most people, you hate the government, you hate paying taxes, and you want to pay as few taxes as possible. That is what you're after. But let me ask you, do you already own your own home? Are you going to try and buy a home soon? Are you going to buy a bigger home soon? I won't ask you if you're trying to finance a car or if you want more credit cards, because you really shouldn't be financing cars in the used car business. And you also shouldn't have any credit cards because debt is bad. But anyway, if your goal in the immediate future, say the next 2 years, is to purchase a new home or a bigger home or something of that nature, and there's any chance you're going to be in a debt-to-income ratio situation, to income as possible. If you are going to buy that house, they generally want you to have 2 years of continuous work history in the same field. So if you were a car dealer before, maybe you sold used cars somewhere, decided to venture out on your own, by paying yourself on a W-2, you would then put down on your application that, XYZ Car Lot is your employer, which is a truth, and here's your W-2 to show your wages, which is another truth. However, if you put down you were self-employed at ABC Car Lot, they're going to want your tax returns, which they'll get anyway, but they will see that it's a Schedule C, and then that you will possibly run into some problems getting financing. So that's the first thing to consider. If you already own your house, you're not trying to buy any new things, and you're just after lowering your tax liability as much as possible, these are things that you want to be aware of and things that you can take advantage of. Okay, so when I started according to my accountant, that's a great way to get started. And you pay taxes very simply. It's a Schedule C on your personal income tax. And it basically goes like this. Here's your income. Here's your expenses. Subtract the difference. That's your profit. That is profit and loss from a business. It goes on Schedule C of your personal income tax. And then you pay your income tax. Okay, there's that way. There is a single member LLC, and you elect to pay taxes separately. So it is still an LLC, but the corporation will pay its own taxes, which means a couple of things. One, you'll have to file personal income tax, just like you always have with your W-2, your spouse's W-2s, whatever. But there is no Schedule C income. Then you would also need to file corporate taxes, which is a separate tax return. So if you are paying an accountant, you would probably have 2 separate tax bills. And that's where my accountant was a little hesitant. He said he feels bad taking your money to do this, but I always believe I would rather pay the accountant who I like and want to do business with than pay the IRS. So He says when you get to about $35,000 worth of profit, it becomes worth it to you to start filing the taxes separately for your LLC. And here's why. When you look at your Schedule C income, after your income and you subtract your expenses, you have your profit. All of that number is personal income. So it is income from a business and personal income tax. Income from a business is subject to 15% personal income tax, or self-employment tax, excuse me. What that is when you are a W-2 employee, you pay 7.65 or something like that to Social Security. But when you have income from a business, you're paying 15%. And the reason you're paying 15% is that your employer is paying the other 7.5%. So if your corporation is going to make a bunch of money, 35,000 or more, 40,000 or more, whatever, profit, you are paying 15% tax right off the top for self-employment tax. However, if your corporation is filing taxes separately and you pay yourself by a W-2, then what happens is 7.5% of your wages, I think it's technically 7.65, as the person, you. Your employer, ABC Corporation, pays the other 7.5% tax. But now, that 7.5% that they're matching in your wages is tax deductible to the corporation, where it was not tax deductible to you before. So that's something to think of. And you can file your single member LLC, operate that way till you find out what your profit's going to be. And even mid-year, if you're just killing it, you can then file a separate form with the IRS to elect to file taxes separately. Something to think about. Now, let's assume your goal is to give the tax man as absolute little bit of money as possible. That's what most people want. So my personal goal when I got into business was to give Uncle Sam the absolute smallest amount of money that I could. I don't feel our federal government is a good steward of our tax dollars, and I don't feel that I have enough money. So I want to save every dime I can. So this is an advantage I have as a car lot, but no matter what your business is, there are tax advantages that you should look for. Now, your accountant will give you a list of things to categorize, but most accountants don't actually sit down with you and go, okay, well, this is deductible and this isn't. This is deductible, this isn't. You can buy tax books. You can watch gurus online. But here's just some of the things that I've done that have helped me tremendously in lowering my taxable income. So let's start out with most folks. Do you have a car payment? Do you? How much is your car payment? $700 a month? Well, one thing is when you become a used car dealer, you might want to take a little bit older car that is paid for and drive it. So right away, you eliminate that car payment. Without that car payment, there's no reason to take that money home, so it's not taxable. Now, is the car insured? Well, I'll tell you, my wife and I have no car payments and no auto insurance. So how much is auto insurance? $200, $300, $400 a month, depending on where you live, what you drive? Well, if it's $300 a month, we've just relieved $3,600 of income that doesn't need to come home and be on our personal W-2s. If we had a $500 a month car payment, that's $6,000 not on our W-2s. So that means we could effectively take $10,000 of income off our W-2s and still drive a car and be insured. How is that? Well, at the car lot, we have what's called a garage policy. If you've watched my previous video, we talked about the insurance you need in your car lot. But a garage policy is basically two things. It is liability insurance at the lot, So if somebody, falls, cracks their head open, has to go to the emergency room or whatever, we're covered. It is also auto insurance for cars that are out on test drives, for take-home cars, for cars operated for the use of business, doesn't matter. So my insurance company knows that my wife and I drive a car from the car lot full time. We do not own a car. The car lot owns the cars that we drive. We do not have auto insurance at home because it is covered on the car lot's policy. And what about fuel? Well, about 90% of the fuel that we purchase through the car lot because it's business related. So very rarely do we put any fuel in the vehicles for personal use. Now, what personal use is or isn't is probably debatable. What agreement you would have as an employer with your employee for the benefit of letting them use a vehicle, that's up for debate as well. That's something that you and your accountant need to look at. I will just tell you that for me, I pay almost no auto fuel. I pay no car insurance. I have no car payments. So easily $12,000 a year of income that I had at a W-2 job, I now don't need to collect at this job because it's all a relatable business expense that my accountant is totally comfortable with and writing it off. Now, what's some other expenses from your car lot or related business that you might be able to write off? Do you have a cell phone? Do your customers call your cell phone? Do you use the cell phone to post ads for your dealership, make videos for your dealership, things like that? Well, you're going to be writing that bill off then, aren't you? Do you have an iPad at the shop because it's easier to make videos with on an iPad? You probably need to write that off. I have all of those items. I got a nice MacBook I bought, and I use it for processing videos and doing my day-to-day operations. So tax deductible, doesn't need to go on your W-2, and has a business purpose. Another one, which is kind of funny, but not, the accountant gave me this lecture, which was when you're asking if it is deductible, would you have bought it if you didn't have your business? So when I first got into the car lot business, I bought my concealed handgun license because, well, when I first started, I sat out there pretty much by myself. I came across some dirtbaggy type people. So I got a CHL, and he felt like we could defend that. And then, well, I didn't have a carry gun, so I had to buy a carry gun. We can defend that. So tax deductible firearm, I carry it with me to work every day just in case some pissed off customer that got their car repossessed because they didn't pay for it came back around. I have a big safe at the shop. It keeps money, it keeps equipment, things like that. Tax deductible. I have a pit bull. Why? Well, he's personal protection. He comes to the lot with me. He hangs out. He barks at strangers. So my pit bull, who is personal protection, is a security expense. And because of that, he goes home with me because I'm not worried about protecting my shop. I'm worried about protecting myself. So he rides home with me. He has to be fed. That's deductible. He has medical issues, believe it or not. The poor bastard's got an autoimmune disease. So all of his related expenses are security expense that are deductible. I have another dog at home. There's nothing wrong with her, and she's just a pet, so she's not deductible. But that's something that people maybe didn't think about right out of the gate, and it's an expense that we use. Now, I want to point out that most all of these expenses are just practical examples of the expenses that are deductible that show up on your Schedule C. You know, your rent, your utilities, your office expense. You know, did you have to have a desk? Did you have to have a chair? Do you buy photo paper? Do you buy laminate? Do you buy pens, pencils, all that fun stuff? Obviously, you've got to have a computer. You've got to have internet, those things. So I'm not telling you anything new here. I'm just trying to get you to see what some of the practical application of some of these expenses could be. Let me ask another one, and this is the one where you can't go stupid crazy and you have to have good documentation. But do you like to eat out? I like to eat out. So how do I maximize that? Again, how do I minimize what I have to take home to have the lifestyle that I want? Meals and entertainment are one of those areas that can get you in trouble if you think you're going to be writing off every meal you ever ate. That's not how it works. How it does work, though, is if you are having a business meeting at a restaurant, or if you are entertaining a potential customer or investor, business partner, things like that. So what I do is I plan the meals that are the most expensive to meet that criteria. So when we go out to a fancy place, I'm going with somebody that's consigning a vehicle with me, or has gone partners in buying vehicles with me because they wanted to make a little bit of a return, or a mechanic, a mentor, somebody in that area, marketing partners, investors, whatever you want to call them. What do you need to do with that receipt? Well, after you've paid that bill, make sure you're putting down the name of who all has attended and what you discussed, and it's dated, and it is completely legitimate and allowed for. There's nothing to fear in doing that. You just don't want to go out every day you buy a meal or a cheeseburger thinking that's a meal that is meal and entertainment expense. It's not, okay? It is for the purpose of discussing your business, growing your business, and increasing your business, having that meeting at a restaurant, or taking that investor that's given you a chunk of change to a football game as a reward and discussing how we're going to move forward. That is the deal. So those are things that you'll get enjoyment out of that you can write off and lower your tax bill. Maybe you're not ready for a full-time business. Maybe you're just looking for some ways to earn a little bit of extra money and get some deductions. Well, here's a quick, simple, and easy one for you. You could always become a content creator. Everybody nowadays, if you look at their Facebook profile, they're probably deadbeats collecting welfare. But what does it say on their Facebook profile? Digital creator or content creator. You can do that yourself. If maybe photography is one of your hobbies, something that you really enjoy, or videography, or maybe you really, really like to eat out. How could you make that tax deductible? Well, it's pretty simple. If you started a business for a couple $100s, then you could write off your video camera, your phone that you record videos on, your computer that you edit videos on. Maybe you want to do a blog or vlog, as they say, about food, and you want to do local food critic videos. What would you have to do? Well, you'd have to go to a restaurant, right? You'd take your camera, you'd record the food that you ordered, you'd talk about the food that you'd ordered, you'd have to pay for that food. All of that's deductible. And the mileage to go to that restaurant to do it is deductible. What if you wanted to check out a fancy restaurant in Miami for your vlog? Well, you'd have to fly to Miami, you'd have to stay in a hotel, you'd go to the restaurant, you'd film the food, you'd maybe get to talk to the chef or something like that, give a little history of the restaurant, you'd have to fly home, tax deductible. You're going to eat one meal at that restaurant while you're there for 2 days? Well, all the other meals while you're traveling are deductible because you're not home. So just something to think about. All right. Yeah, you'll pay income from YouTube if you get monetized or if you get sponsorships, but you'll also have deductions for things that you're doing that you already enjoy. Same with me as a car dealer. If I'm going to California and I stop at the dealer auction because I might buy some California cars, whether I buy those cars or not, I was there with that business intent, and that trip is now deductible. Just something to think about, guys. The government just screws over the self-employed people, and it's just not worth it because the taxes are too high. Well, I will say there are some things that can be frustrating about being self-employed. It also depends on how you structure that self-employment, Maybe you own that business, and so what comes home as self-employment tax is minimal, and what comes home as W-2 tax is better. Or maybe your business isn't making a lot of money after you deduct all of your legitimate tax deductions. Something to think about, guys. If you have a hobby that you want to turn into a business, even if you don't make a whole lot of money, you can increase your quality of life and lower your tax debt by planning ahead. So my advice, when you're ready to start a business, buy a tax book just to hear from other people about what things and how you can write them off. Talk to an accountant before you get started. Do you want to be an LLC? Do you want to be a subchapter S? Do you want to be an LLC that has elected to pay taxes on its own? What might work best for you, and what are you out to accomplish? Do you need to keep things status quo, take a W-2 for a while, and have a good income show up so that you can finance that dream house or that better house? Or have you bought everything that you want, and your idea now is to minimize how much money you're taking home every month on a W-2, but you really want to do retirement account, or you want to do all you can to pile that money back into your business to grow it? Those are things to think about, guys. Again, I'm not an accountant. These are some of the things that I do that has really helped me. I hope this video helps you, gets a little bit of spark going in your mind about what you might want to do. And as always, thanks for watching. Y'all have a great one.